5 days on from the Conservative Party's landslide election victory, and it's too early to judge if Boris Johnson will enjoy a long-lasting political honeymoon. Well, Johnson's party came to an abrupt end over worries about a no-deal exit from the EU, at least the party on the pound. The Prime Minister said he planned to pass a law against extending the Brexit transition beyond December 2020. The news saw the pound erase all of its post-election gains. Well, still with us, Stephen Macklow-Smith of JPMorgan Asset Management and Nicola Mai of PIMCO, both still with us. Stephen, let me kick off with you. When you look at this honeymoon period, first, businesses want to have a little bit more certainty about where services stand. The pound's worried about a no-deal Brexit. But overall, it feels like we're, coming to an end of all of this uncertainty.
Yes, I think that's fair, and I think yes, the pound is down very strongly in the last 2 days, but it was up very, very strongly in the 2 days preceding that. So if you take the average level over the last week, it's more or less unchanged. And we know where the pound gets to when markets are really worried about a no-deal Brexit, because that's where it was in the middle of last year. So, I don't think that there is too much political risk actually invested in sterling at the moment. The new news, if you like, was this notion that you could entrench in law a refusal to extend before December 2020. But when you have a majority of 80, if you pass an Act of Parliament, you can pass another Act of Parliament to adjust that. So I'm not sure that that's a hard stop.
But it's more about the psychology, right? That Prime Minister Johnson, people thought that with a large majority he would soften, but it seems that the negotiating tactic with the EU will go back to, right, I can bring this down to the wire and also exit without a deal.
Yes, but I think also he's managing a variety of strands of policy, and I think that his intention is to try and de-escalate the way in which Brexit is dominating the headlines and start to push other parts of his own domestic agenda. So from my point of view, I'm very, very interested to see what the next budget is going to hold, because we'll get a clue as to how much fiscal expansion we should see in the UK over the next year.
Nicola Mai, the game of the season, it's going to be under every tree, I'm told, is called fiscal space. Give us an update. Where's the fiscal space in the United Kingdom?
Well, you could argue that with gilt yields so low and actually the deficit under control, there is a decent amount of space for the UK government to spend. So if you look at the latest Tory manifesto, the fiscal easing this year will be just below 1% of GDP, which is fairly meaningful, not huge, but fairly meaningful. I think if the UK wanted, they could probably afford to do somewhat more.
Stephen, is there opportunity here within domestic UK securities? Say for our global audience, the partition between UK multinationals and UK domestic valuations. What's the difference there?
The difference is that if you think about the FTSE, for example, the FTSE is, 75–85% dominated by overseas traders, and therefore it tends to trade inversely with what sterling is doing, because clearly there's then a translation effect. The FTSE 250 is a rather more domestically oriented index. We're not too concerned about valuations within small and mid-cap, and clearly if there is a fiscal expansion and that improves the level of confidence domestically and domestic demand, then those companies could stand to benefit. But we need to see exactly what direction that fiscal easing moves in. One of the interesting things that came out of the election campaign, to my mind, was Boris Johnson's very specific ruling out of tax cuts across the board. The Conservative Party traditionally has stood for lower tax rates, but he seems to have rejected that approach. And from his point of view, it looks as if fiscal expansion will take the form of higher government expenditure on its own, rather than tax cuts trying to boost incomes for consumers. Yeah, and the slogan of, the government, the people's government, is also, I guess, something that people need to adjust to. It feels like, a lot of money being spent in the north, a lot more socially, I guess, aware. What does it all mean for gilts?
Well, I would say that, at the margin, the higher the fiscal stimulus, the higher, the gilt yields. So, our sense is that gilt yields have some room to rise relative to treasuries going forward. If you look at gilt yields versus treasuries, that gap in the 10-year space is close to the wides we've seen. And as Brexit gets resolved, we feel that, and the fiscal stimulus, is implemented, there's some room for some sell-off in gilts relative to treasuries. Which would be good for plan sponsors in pension funds and insurance companies, which we were talking about off air.
Overall, is this the new Conservative Party?
I think it's definitely a material change from Conservative governments that we've seen in the past, at least from a kind of headlines point of view. And if you just looked at the TV pictures of the so-called Teesside Tories arriving yesterday for their first duties in Westminster, yes, it is a major change when you think about what's gone on electorally in the north of England. But now the Conservative government has to deliver for those new voters.